Hello, this is AJ Diliberto, your friendly neighborhood insurance agent, and it is that time again. Open enrollment has begun for health insurance, and just wanted to get a video out here, explain some of the changes. There are three big changes that I did want to go over today. Two of them only in California. California's broken new law, passed a law here recently specifically regarding health insurance in the state of California. They're the only state to do these things. They're the first, of course. Maybe it's going to be a trend. Maybe it'll be a failed experiment. Who knows? But they did it. It's a law, so make no doubt about that. So the first part of the law, this is something that's going to be beneficial. Now, you know that there's yings and yangs with insurance. I talk about that all the time, where sometimes things are given and they're taken away. So there's always got to look at both sides of that. So in this case, the yin, if you will, is that they have expanded the poverty level line. So if you remember with the Obamacare, you can make up to 400% of the poverty level, and get a tax credit, tax subsidy, be eligible for that. And so that's been the law for however long it's been, 8-9 years, whatever. So what California's done is they've said you can make up to 600% of the poverty level. So, that's going to affect a lot of people. That's a lot more of the poverty level. So, so text me back or email me and I can get you a copy of those types of things, or just, call me and let me know, and we can talk those things out and discuss what your income was last year, what you expect it to be, how many people in your household. It factors in all of those things. But nevertheless, it's going to have a pretty huge impact on a pretty huge amount of people. So now that's going to be only on your California return. So, there's the administration's going to be done with Covered California, and I think that they're going to be slated with organizing the federal versus the state and all of those things. So, who knows? I mean, Covered California was obviously, a bit of a nightmare when it first got started, but now several years into it, they're obviously more put together and things like this. So hopefully they can handle all that, but it doesn't matter. That's what they've been slated to do. So that's the change number one: larger poverty income level line. So additional subsidies and tax credits and tax and insurance premium relief for more people. Now, what's the other side of that? Well, the other side of that is they also reinstituted the tax penalty for not getting insurance. This is called the individual mandate. And when Donald Trump took office, he scrapped it. He said, no more individual mandate. And so for the last year or so, there's not been, like this year, if you didn't have insurance, there's no penalty. So now, of course, there's a penalty if you ended up needing health care, and now you've got costs that you have to deal with. But of course, if you have lower income, you can get help or Medi-Cal or whatever the case may be. But there's now a penalty. If you do not have health insurance at all, there's going to be a $695 penalty, or 2.5% of your income. So when you think about that, so 2.5%, that's like over $28,000 as an individual. If you make more than $28,000, 2.5% is actually more than $695. So it could get significant. You make $40,000, $50,000, $60,000, you're talking about a significant penalty to not have insurance. So this is just what's on the table. So they've expanded the amount of people who can get assistance to say, hey, we're going to have this penalty, but we're going to try to help more people who can't afford it. And that's what they've done. So we're going to run those numbers for you. We got to check that out and see how all that stuff plays out. Now, the third change is in the premium. So this is the first year. So the good news is this is the first year that there's not really significant price increases. So that's good, right? There's the price increases have been somewhat stabilized, not really a whole lot, 2-3%, maybe 4%, but not the 8, 10, 12%. I think Blue Shield says theirs was like 1%. So, but don't be fooled. The cost for insurance is less, but the benefits have been changed. The benefits have been changed. So almost across the board, it's pretty significant. Across the board that everything has gone up. Not that every change was significant, but what's significant is that everything changed. If it was a $30 copay, it's now $35 or $40. If it was a 30% copay, it's 35%. If it was a $2,500 deductible, it's $3,500 or $4,500 in some cases. Again, sometimes it was a little less. Like Blue Shield's got an 18. They called it the PPO 1850. Probably our most popular Blue Shield plan that we sell. So a lot of people have that. It was priced right, and it was called the PPO 1850. Well, now it's the PPO 1950. And so again, just $100, not a big deal, but then the max out of pocket has also been increased. So if it was $6,500 or $7,000, it's now $8,000. So again, everything has just changed a little bit, shifted around, but the goal was to have not there be a lot of additional premium due. So instead of, because every year the premiums are going up and benefits were being affected a little bit. So here I think they wanted a bigger benefit change. And so they were able to change it significantly and not really change the premiums all that much. So there's your yin and your yang. So those are the three things that I wanted to talk to you about here, right? The new changes in the legislature. We have the expanded poverty level. We have the penalty, the individual mandate now back in force, alive and well. And then we have got the premiums not really going up, but we do need to pay significant attention to the plan you have and what those benefit changes are on your plan so that we know whether or not you should keep that plan or is some sort of another shift going to be meaningful. So there's other plans as well. Oscar has made some changes. A lot of people have gone with Oscar, and people have been very happy, by the way, with Oscar, my clients, myself included. But they've made a change that if you're on the exchange, so if you're getting a tax credit through Covered California, then those plans actually do have a smaller doctor and hospital options. So they've changed their networks. So there now is an on-exchange network and an off-exchange network. Blue Shield has the same network on and off exchange. I know there's some confusion in the marketplace that, well, I don't want to go on exchange with Blue Shield because, my doctor didn't take it, but same with Blue Shield, but now Oscar, it is different. So now we've added some complexity and confusion in the sense that different plans are changing and becoming different things. So we want to take a look at that, but those costs are going to be, again, what's the yin and the yang? Well, smaller network, lower price. So all of these things are going to create that whole, the options and the yins and the yangs that we have to look at as it pertains to all of these things. So anyway, so that's it. Oh yeah, and one other thing. So there is another, a lot of people ask me, and I'll just cover this briefly, but a lot of people ask me about, is there a hospital only plan or whatever? Well, I got just two things to run over there. Number one is not really. Blue Shield, Insurance Department of California approves almost nothing. Okay, so few things are actually approved. There is one policy that's awesome actually, and actually I was going to move myself to this new policy. It's like a hospital plan. It's got all kinds of indemnity situations for everything from doctor visits to MRIs. It's tremendous. I'm very, very happy with it. The cost was lower. Looked like that was going to be something that was going to be perfect for me for this year. It was just approved last year. Thumbs up, ready to go. And then the mandate came in, and now all of a sudden the math of the mandate and this whole thing, it's really kind of, messed up my plans for myself, messed up my plans really because I thought that it was going to be a good fit for a lot of other people. And now it appears that it's not going to be a good fit for me or for a lot of people, but it's still going to have some applicability there. I guess the point is I'm always looking, I'm always out there, but California's done a tremendous job of limiting options. Limiting options is what they've done a tremendous job of doing. And, so they think it's for our benefit, obviously. They believe if they don't give you the option, then you can't hurt yourself. So that's their philosophy on it, right? They want to make as few options as possible so that your only option is to buy one of these plans. And if you buy one of these plans, the theory goes that there's a lot of people insured, and because there's a lot of people insured, our prices go down. And so the narrative is that that's what's happened and your prices have gone down, but it's not true. If they're going to affect the benefits, if they're going to make the benefits get worse and worse every year, then there's not it's not It's not really, our prices didn't go up because they've reduced the benefits. So that's the reality of it, but we all have to live with it. I'm in California, you're in California, so this is something every one of us as Californians, we have to deal with this. We have to tackle this issue. So, if you like, this video, you think it's good for someone that forward it, please. All my info, I get very little, do very little outreach. Marketing, it's all really word of mouth. If you're going to see this, maybe you see it on Facebook or whatever the case is. So just, forward it along, pass it along any way that I can get, referrals to help people. Because again, I'm going to take the time to be customized. It's the only way to do this. There's no blanket answer. Okay, there's no blanket answer at all. What your income level is, what health situation, your kids, you're married, what's your how many deductions do you have, how many people in the household, what's your tax return look like. All of these things are all part of the mix that we've got to factor in. And then if you want to throw in what doctors you use, what hospital you're close to, there's a lot that needs to be worked through. And so anyway, appreciate all your guys, support and love, and, the referrals that you've provided to me, and your loyalty has been tremendous. And again, we're here for another year. So let's roll our sleeves up and let's get busy. Anyway, thank you. AJ Diliberto, Friendly Neighborhood Insurance Agent, signing out.